we're going to talk today about a wave of foreclosures. They're called UCC foreclosures. We're going to talk about that. We're going to talk about mezzanine financing. We're going to talk about conduit loans, or what a lot of people talk about, CMBS. And then we're going to talk about what's happening. Now, this may not be the type of real estate you want to invest in. This is what I'm going to be shooting for, because the larger the amount of units you buy in one whack, whether it be, going from a single family rental to a fourplex, you see a massive change in reducing risk for vacancy numbers. You see, all of these really great things. Well, when you move into commercial, going from 5 units to 500 units, the price per square foot drops dramatically. Yes, there's additional charges, but there's also additional opportunities, okay? So without further ado, I've got a story, and sorry, I completely hit the button too early. We're gonna dive into that story real quick here. And it's out of the Commercial Observer, and it's entitled, "Why the Number of UCC Foreclosures in Commercial Real Estate Have Spiked in Recent Months." Now, again, regardless of what type of real estate you want to invest in during this next crash, you want to have a little bit of working knowledge of how commercial real estate flows, because as the commercial real estate mortgage industry keeps imploding, it is in an epic downturn right now. That gives you signs of what's coming in the standard mortgage industry, right? If you want to learn more about this, that's this course right here, Investor Mortgage Pro. This is the last day of the pre-filming discount. After that, it will never be this price again. It's like 87% off, right? Thank you so much, Nashville Pasta Man, for this. So this is an exciting type of financing, okay? So let me explain what UCC is. Well, actually, let's start with mezzanine financing. The easiest way to explain mezzanine debt is it's like a second, but with a twist on commercial properties. So when you have conduit loans, which actually just think of CMBS, commercial mortgage-backed securities, but a conduit loan is a specific loan by itself for one property. And then they are bundled into securities, and that's what makes up commercial mortgage-backed securities. They are fixed at a fixed rate. They're usually amortized between 20 and 25 years. There are I talk about in the course, government programs that actually extend to 30-year financing on these. But they have a fixed time period, whether it be 5, 7, or 10 years, in which that's when you get the loan for that much, for that long, and then you are forced to refinance it. You got to go back to the bank and say, hey, I've got to re-up this thing. But there are a lot of times where a borrower will want, they can't get out of their mezzanine. They can't go and borrow more because rates have gone up, like we've seen recently, right? And so what happens is they need more money. They need to either repair the property or they need a bridge loan because they're having a hard time making cash flow. Because what you're seeing right now across the nation is, out of the blue, nobody saw these interest rates coming. We all know, if you've been following the channel for very long, that I was warning about this pivot every time inflation picks up. Well before Jerome Powell made the announcement, this is what happens throughout history. And this is what is really exciting to me, because there may be a lot of people that impress a handful of people, or maybe the masses, but they don't impress me just because they own a lot of real estate. Doesn't mean they know what's coming around the corner. And that's why it's very important to understand real estate cycles. That's why I started teaching that two and a half years ago. So when we talk about this mezzanine financing, it's a bridge loan so that you could get more money out of your property, tap into the equity in that property based off of valuations, right? Debt service cover ratios. But what happens is, if you fail to make those mezzanine payments, the lender can now convert that into equity in the property and take over the property, take it from you, and now move it into a foreclosure. So UCC, the process of foreclosing on this mezzanine debt is governed by the UCC section, I had to write it down, 9-610A, and it involves a non-judicial sale or of a UCC sale, which it's just automatic. You don't have to go to the through the foreclosure process, have some kind of judgment granted, and it's really fast compared to typical foreclosures. It can take as little as 10 days, but typically take between 45 and 90 days. So it's a much faster takeover, right? So when you're taking out this mezzanine debt, you're paying much higher rates of interest over and above what you're already paying on your commercial mortgage-backed securities, or your conduit loans. All right. So now that you've got a little bit of a basis of knowledge, type 1 if that helped you out, type 2 if you already knew it, and type 3 if you don't care. I'd like to see your thoughts on this. We're going to talk about this story out of the Commercial Observer. And so what we're talking about is the foreclosures, UCC foreclosures, being that this is mezzanine financing. So this is a second on your property that actually has way more power, a more powerful position than if you had a second on your primary residence or a second on a rental, right? All right. So while foreclosure is generally bad news for business, for those who work in commercial real estate, foreclosures, it's good. And the news has been especially good of late. Foreclosures are definitely up. There's an absolute ton right now, said foreclosure auctioneer Matthew Mannion, principal at Mannion Auctions. This is the busiest we've been before COVID. All right. So now, again, we're talking about commercial properties, but think about a commercial property, because most people, they envision commercial properties like a Costco building or Trump Tower, or these massive buildings. Think about a fiveplex. I want you to just for a second think about a fiveplex. I know it sounds crazy. It's super low. And the amount of foreclosures on that are size of property are actually really low right now. They're primarily in massive high rises, but that is the realm that it falls into. Okay, all right. It says here, while foreclosures are up across the board, Mannion and others note that the Uniform Commercial Code, or UCC foreclosures, which foreclose on mezzanine debt and compress that process to just a few months as opposed to years for judicial foreclosures, are through the roof. So the reason why I want to share this with you is because this is going to be your first wave. See, we've been talking about other types of foreclosures being in special servicing, all right? Single family homes, 2 to 4 unit properties. A lot of them are in the middle of this special servicing wave. And it's a way for banks to really put off the foreclosure process because they don't want to start booking losses. When they start booking losses, that means that they are now public domain. The public knows these banks are taking on losses. This is bad. So what they're doing is the banks are taking on extra debt from the Fed. It's like a stealth QE for these banks, and they're putting them into special financing, and they're trying to just delay the inevitable, right? But you can't stop the wave in mezzanine financing, because the company that gave the mezzanine financing takes over the property right away, kicks the old owners out, and says, all right, we got to get this figured out, and we got to get it figured out right now. So they go right to the company that put out the conduit loan, and they start working this over, okay? So this information hits the public. And quite frankly, this is really exciting. I know I'm putting this video out on my second channel, so the masses won't get it, but I don't know if everybody at Economic Ninja would get this, if you understand what I mean. Says here, to demonstrate the intensity of the increase, Mannion reports that he advised on and or executed 19 UCC disposition auctions in 2019, right? 19 of them in 2019. And he did 25 of them in 2022. That's a pretty big increase, right? This year, he has already completed or advised on 41. This is just one auction company has already seen an increase of almost 100%. And we just got through half of the year. So this is incredible. And he expects that number to reach 70 by the year's end. So going from 25 of these UCC foreclosures, this company is expecting to see 70 of those foreclosures in 2024. Now, you may be thinking, Ninja, that 70 is not a lot. Well, first off, that's one company dealing with this. A lot of law firms deal with this, right? This is an auction company, but there are also law firms that deal with this. And you have to realize these are very expensive properties. There's a lot of money being lost. All right. It says bankruptcy attorney Jonathan Paternak, a partner at David Hoff Hutchner and Citron, blames the uptick on the business interruptions that occurred during the early days of COVID. That guy is high. See, that's just a great example of you could be an educated idiot. No, the reason why this is happening is because, I mean, this blows me away. You got an attorney sitting there going, well, it's because of COVID. No, it's not. It's because interest rates skyrocketed and properties that were purchased before COVID, they were purchased looking at the cap rate and their cash on cash returns based off of that scenario. Interest rates being low. I mean, some of these mezzanine loans, let's talk about conduit. Before COVID, there were conduit loans for multifamily properties were as low as 4%. Unbelievable, right? Let me ask you this. Type 5 if that blows your mind that you could actually get conduit loans for big commercial properties as low as 4% before all this started, when you were getting 2.5% for your home, but you could actually finance a huge building with lots of tenants in it for 4%, 4.5%, let's say. It's pretty mind-blowing, right? Well, now those conduit loans are way higher, and people they physically cannot refinance them. Mezzanine debt is much higher than those rates, right? It's like the difference of going and getting a first mortgage on your home, let's say at 5%, you go and say, hey, let me take it out an extra 20 grand just to, fix up, build a room addition, whatever. You go to the bank, go get a second, and they go, well, it's going to be like 8.5%, 9%. You're like, what? I paid 5% on my first. Like, well, it's a totally different market because of the risk involved, right? Now, mezzanine has less risk than a second because, again, they take over the property. Sorry, I digress. It's a totally different market, okay? And this is why I want to teach people these kind of things, because once you start to realize how to go get this money, you're going to start realizing things like how easy it is to take over CMBS loans. All right, here we go. He says here, the real estate industry didn't really get to take advantage of PPP loans, and very few took disaster loans from the SBA. This is from that attorney Paternak, citing the Small Business Administration and its Paycheck Protection Program. Since the developments deals are leveraged and quite often with either institutional or private loans, interest continued to occur. When they ran out of capital, default started to compound, which eroded the equity in the deals and made it less attractive for developers to put more money into it. This, combined with the increase in interest rates, created what Paternak calls a perfect storm in defaulting properties. That part I agree with. Jason Nagy, chair of the Distressed Real Estate and FinTech Practice Groups at Outfit, has represented lenders in commercial foreclosure litigation for around 20 years. Nagy believes the market increase in foreclosures is a sign of the commercial real estate trying to get back to normal after the world changing from COVID years. And it's going to swing way past normal. Says here, Greg Corbin, president of the bankruptcy foreclosure and restructuring advisory firm Northgate Real Estate Group, says the foreclosures are up by an exponential amount this year compared to previous years. He says it's years worth of work wrapped up into a quarter for us right now, said Corbin. While foreclosures are up across the board, UCC foreclosures in particular have exploded in popularity, mostly due to the incredibly short time frame for initiating the process. Let me tell you right now, not only is the UCC foreclosures up, mezzanine financing is also up too. There are a lot of individuals and companies that are taking out mezzanine financing against their projects right now because they can't afford to redo their CMBS. They've got a year or two left, and they need sort of a bridge loan to repair the properties. I'm seeing it with hotels in Dallas to bridge vacancy rates on new builds. There's all kinds of craziness going on. So I'm excited about this because I'm going to take advantage of it. If you want to take advantage of it, you want to learn about everything from buying a single family rental to 100 units, check out this course. What is it? I'm totally blanked on the name now. So you'll just have to click that. You can check the link down below or check that out. It's up to you. But I want you to build your education and go way past what you thought of was possible during this next real estate crash. Matthew, thank you so much for the super chat. Everyone have a great day. Real Estate Ninja is out.